Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Right, and I didn't make this point about Australia, but since you brought it up, look at what the Australian dollar has done. It's made a massive rally here, but even it's made a massive rally during the dollar bear market up to almost parity against the U.S. dollar. And take a look at what's happened to Australian industry. It's gotten stronger and stronger, and they've increased their manufacturing and increased their export in a huge way with a very strong currency. So it's just another good example.
And Jack, doesn't it make sense that if all things stay stable, their currency might go even higher because they're actually, at least the lip sync that we're hearing now is that rates are going to go higher in Australia. So if the market stays stable, the Australian dollar could actually rally even further.
It's a very positive, self-reinforcing cycle. And the reality is if U.S. were to change policies, they could get into that same self-reinforcing cycles. We've seen the U.S. renew itself before when we've been in these situations. We came out of the malaise of, kind of the Jimmy Carter era, looked a little bit similar to what we are here. And I don't say that just to try and criticize Jimmy Carter, just using his term in terms of time frame. There are, again, a lot of things out of his control in terms of the inflation that was started before he came in office and the other problems. But I'm just using them as a time frame. But coming out of there, the U.S. economy renewed itself in a very big way during the Reagan administration. And again, really, whether you liked or disliked Reagan politically, I don't want to get into that. But the reality was what Reagan did to juice the U.S. economy was he cut regulation on businesses by about 50%, 50% decline in regulation in the U.S. economy. And then also Paul Volcker put the economy through a massive, massive amount of pain, kind of the tough love, pushing U.S. interest rates up to 20% and just squeezing the inefficiency and deadwood out of the system. Now,
open heart surgery.
Yeah.
Sort of like open heart surgery, right? It was very traumatic at the time.
Right, but he cleansed the system. And they knew that the entrepreneur was the driver of growth in the country and jobs, and reducing the regulation on business by 50%. And getting rid of the dead wood is what renewed America and allowed us to grow more than anything. If you look at U.S. now, what's happening? We're increasing taxes, hurting small businesses that are going out, that create the jobs. We're increasing regulation in a very big way. So we're doing all the opposite things that would cleanse, and we're saving morbid companies. So we're doing exactly the opposite that we know works to rejuvenate an economy, and that's the scary thing.
Jack, one last question that I have, and I don't know if there are any others, but what about Mervyn King, the Bank of England? Didn't he seem like he's changing directions there in the last couple of days?
He did in a very big way, and you saw the British pound respond accordingly. Mervyn King made a speech, and it was very much a market-based speech about stop trying to support these banks that are too big to fail. He wants the market to have some discipline onto these banks. And let some of those fail and really allow the system to cleanse. And I think that's one of the reasons you saw a big bounce in the British pound, this idea that maybe this is the first industrialized economy that's really going to do some healing in the right way. Still an open question because the government isn't on the same page as Mervyn King. So at this point, we don't know if it'll play out. But it was a very interesting response to some refreshing talk from their central bank governor.
Interesting. And there's another one. Yesterday, Bank in New York here in the U.S. Announced, or at least they made public, that a lot of investors were saying that they had hoped that they would sell their huge amount of risky assets. In fact, they sold, I think, $12 billion worth, and the CEO said, I think his name is Kelly, he said, we get it now. We get it that the market wants us to take less risk. So maybe slowly this is what's happening, that people are starting to realize less risk makes sense. But, I mean, I guess the problem went on for so many years, Jack. It takes a while for we, as a world to heal from all that, all the derivatives.
Well, that's definitely true. But the reality is, to pump that much money into some of these morbid assets that are never going to be rejuvenated, they really didn't take those dead assets off the books. They're still sitting there, and the U.S. taxpayer is on the hook for these guys. So we would have been, from a policy standpoint, the U.S. would have been much better off, as I said, just letting some of these things die. And these people, oh my God, what are we going to do without X, Y, or Z? Well, some of the super regionals that had clean balance sheets and good distribution systems would have been happy to step up and take those clients on. And also, if the U.S. government, instead of, again, rewarding the political class and morbid companies, and did a direct, just a direct tax cut in a big way in the same type of numbers, that means that money would get right into the real economy instead of going on to these morbid bank balance sheets and never getting into the real economy. So it was very much a wrong-headed policy the way they went about this.
Yeah, good point. Do you see any other questions, Jack? Thanks for being the host and the guest. I apologize.
Sure. I think we got most of them, Steve. Thank you.
All right, Jack. Thanks so much. Let me take the ball back. I think that actually the presentation or the slides might vanish at that point. But I want to thank you, Jack. I wanted you just take a second for a closing comment, and then I'll close the webinar down.
Sure. Just first like to thank you and ISC for allowing me, time to share these ideas, no matter how strange they may be to a lot of people. But just trying to drive home the point. When we hear policymakers and economists talk about there's just a simple relationship between currencies and exports, just keep in mind that it's never really that simple. So anyway, and again, just thank you everybody for taking your time today to stop in and listen. I really do appreciate it.
Jack, thank you very, very much. Really appreciate every time you bring in insight that most aren't really thinking about at all. But for all of us, take Jack's thoughts, and you know what? You're going to find some idea based on what either Jack said, or it probably it adjusts your thinking in some way, whether it's an option or an equity or a bond or anything else. Think about risk reward, but just remember there are a lot of implications to various announcements, and that's what Jack was trying to allude to, and that maybe you just don't want to do the knee-jerk thing, but think about it a little bit more. But thanks again, Jack. Really appreciate it.
Sure, Steve. Have a good night. Good night, everybody.
So I just want to remind everyone that we'll have another guest on Tuesday. Steve Mizik will be with us from Online Trading Academy, and that'll be next Tuesday, 4:30 Eastern, of course, 1:30 Pacific. And if you cannot make it, please come to the archives. We make the archives available. Each and every presentation will be archived. They are archived, and you'll be able to catch them the next day. So please come back real soon. And I want to thank Jack Crooks. I want to thank all of you for making this presentation, again, so great. The attendance was great as always. Great questions. Thank you so much for attending, and have a great evening. Bye now.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.